In this video, I have the best support and resistance trading strategies for day traders, but also for traders on the higher time frames. I will also show you how to trade breakouts and when to trade fakeouts effectively using support and resistance and price action. Let's start with my favorite breakout strategy where we combine support and resistance with liquidity concepts and also price action trading. And here we're looking at an established support level. This level has been tested multiple times. And besides the support level, what else can we see is that the market has been in overall downtrend. That's really, really important to understand when you zoom out to see, is the market moving up? Is it moving down? Or is it going sideways? And here we can clearly see that the market is making lower highs. This sets the tone for our price analyses because it makes bearish continuations a little bit more likely than bullish reversals. So what we see here now is that the market is trying to make a run at a support level and it seems like it's breaking out. A big problem that many traders have is that they jump onto those breakout trades way too fast and they trade them impulsively. As a breakout trader, you probably have been waiting for a long time when the market was stuck in this sideways period, and then the market finally breaks out and you don't want to miss the move, and then what do? You blindly jump into the market. However, what I have seen and noticed in my trading is that the tendency for pullbacks and the tendency for stop runs or liquidity runs has increased significantly over the years. And what happens around those support and resistance levels is that you see a lot of volatility and a lot of liquidity clustered. So if you are a breakout trader and you go short here, you probably have your stop loss somewhere in this area. This is then what we would call a stop zone. And what often, not always, but often happens is that the breakout traders will get punished for being too early. There's a lot of trading going on around here. We also have probably a lot of long traders and different traders getting into the market and trying to unwind their positions. What I would recommend in the beginning, if you're just starting out, wait for the liquidity run, wait for the market to push back into the stop zone, and then look for signs that the stop zone is holding and the market is reversing. This is a very, very common behavior in the markets these days. What we see is that the market is pushing back into the support level, into the stop zone. Many traders will now believe that this is a fake out and they will try to go long here. This is ideal for our overall short bias because we want to get into the long-term downtrend. So what we are doing is we wait for the market to show us a little bit more of a bearish reaction. We want to see that the market is hitting the stop pockets. We want to see that the bearishness is resuming into the market. And then when we see bearishness coming back into the market, that's where we can then get involved and think about shorting. You can see the market is struggling here. We see some volatility. We need to see clear signs that the market is picking up bearishness, which is coming here now. You can see we are back below the support level. We are outside of this range. When you go to the lower time frames, you would see this head and shoulder microstructure, higher highs here and then lower highs here. So we have a micro head and shoulders pattern. We then could think about shorting this market here with the liquidity run in mind. Stop wise, you can be aggressive and just set it above the breakout candle, or you can put it above the recent high here. And then zooming out, you can see we should be relatively safe when acquiring and going for a 2-to-1. Obviously, nothing works 100% of the time, and you have to accept that sometimes this will also fail. But this is a great trend following approach that will help you trade breakouts effectively. And if you have been running into issues around breakouts and if you have been trapped in fakeouts, I would recommend start testing a strategy like this. You can also think about scaling out, maybe at the 2-to-1 level, which is here, get out half, and then ride it to 3-to-1, or maybe even use a trading stop loss approach and then try to capture long-term moves. You can see the market is finally able to get there, very short holding time. And this is quite typical for those liquidity runs after the market is hitting the stop pocket and after we are seeing the selling coming back into the market. Very often, again, not always, I have to really make that clear, nothing works 100%. Very often you will see this strong push when the bulls are completely withdrawing, when there are only sellers left, and when the trend is then resuming into the overall downtrend bearish direction. So really, really nice example here, what the price action is doing and how to trade breakouts in a very effective way. Here we're looking at a long-term resistance and support level. You can see this has been resistance and support many times in the past, and the price action is now back at the level. So let's go to a lower time frame and let's observe what is going on here. First of all, what we can see is that we also had a failed breakout attempt to the upside, so the resistance held here. Then we see here the market is making lower highs. we're breaking through previous lows, which is also important. And one thing that I would recommend when you're looking at support resistance levels and the price action around it, look at what's happened previously. Do you see structural changes? Do you see that the highs are coming down? That's a very important information. Also, is the market able to break through previous lows? So we have a low and the market is now making a lower low. That's really, really important when it comes to understanding momentum and trend structure. Then the market is pushing into here this support level, and then we're seeing a little bit of a pullback. One thing that I would recommend and caution you, if you see strong selling periods like this, you can see we have 3 very, very strong selling candles here in a row. I would be cautious of trading breakouts. The longer a move has been going on, the higher the chances that eventually you'll see a little bit of a pullback. And ideally, if you want to short, you don't want to short at the lowest possible price, right? That makes sense. And therefore, what you do is when you see a strong move, you wait for a pullback and then you look for shorting opportunities. On the pullback, you will usually see a lot of great momentum, and therefore you also get a very good entry price. So let's see what we have. What we also want to see is that the market is showing us some type of deceleration, that the bullishness that we're seeing here is fading, and then when the bullishness is fading, then we're looking for bearish signals. Let's see what we have. When we zoom in, you can see that those are now more or less inside candles, deceleration candles. After some strong bullishness, we see here sideways periods, sideways candles. They show a pause in the market and they show indecision. It also shows that the bullish momentum has been paused for now. Now what we want to see is bearishness coming into the market. We want to see at least 1 or 2 strong bearish candles, which we seem to get now here. So an aggressive entry could be already here after we see the bearishness coming back into the market. So what we could do is for an aggressive entry to look for an entry here. Stop loss could be above the previous support level. We are also putting our stop loss here above the previous highs, which is a great way to protect your trade and your stop loss. And then because we are going with the long-term downtrend or the overall trend, and with the breakout, what we could do is look left and look for target opportunities. Here, for example, or here, those are important swing lows. We can expect that there is some type of reaction going to be, probably also a little bit sooner. Here's a support and resistance flip zone. So we can watch those 3 levels, maybe scale out at the first one. The first one is already giving us a 3-to-1 reward to risk ratio, which is a very, very good reward to risk ratio overall. And that could be our first target. So let's see, the market is moving a lot, and this is very similar to what we have seen in the first example when we talked about the liquidity run. When this momentum, when the bullish momentum here is finally withdrawing and the overall trend direction is being continued, you will often see those strong momentum flushes, those very, very strong moves into the trend direction. When we look at the previous downtrend, what do we see? We see that the bearish candles and the bearish phases are much, much stronger. And that's what we want to trade as well. We want to trade those strong impulsive moves because then we can capture large trades, large winning trades in a shorter amount of time. So that's ideal for us. And we want to look for where is the majority of the market, where's the big interest, and we want to trade in line with the big interest. So you can see the first one would have been hit easy. Now the second one is also being hit, and then the third one now as well. So you can see overall a really, really nice example. We typically don't want to get in as the market moves against us, as against our trade direction at least, and our analysis direction. We want to see momentum increase, and then it's up to the trader. Do you want to be aggressive? How many bearish candles do you require? Do you require for the market to break a previous low as well to get in? This depends a little bit on the aggressiveness of the trader. The more aggressive you are, the higher the reward to risk ratio, but also the lower the win rate because you may run more into fake outs. That's something to consider as well. But if you have a high enough reward to risk ratio, even losing occasionally is not a big problem. If you like this way of trading and if you want to learn more about price action strategies, support and resistance, supply and demand, liquidity, and many other trading strategies, then check out my new trading program, which I call the Tracademy. It's the ultimate trading program. I have a brand new trading course with over 80 videos. I constantly add new videos. You also get personally mentored by me. and you are joining a private community with a live chat room where you can always interact with me every single day. I also hold live webinars every week where you can look over my shoulder, ask questions, and interact with me. I have brand new trading strategies in the Tracademy which have never been shared anywhere else before. Hundreds of trade studies, hundreds of chart studies, hours of backtesting. It's ideal for swing trading, day trading, and I basically show you how to trade all the different time frames. It works for Forex, commodities, cryptos, indices, and we even have stock traders in there. If you're interested, check the link in the video description where you find all the information about the special program, and we currently also have a special offer for you. So if you are fast and you want to join, then make sure to check the link, use the discount code, and then I will see you in my new program. Now we are looking at a fake out Quasimodo pattern. And what do we see? We see the market, first of all, being in a downtrend here on the left side. Then we are going over into a sideways period, and the market is bouncing between the support level and the resistance level. Very well defined, very clear levels. And we are looking here now at the upside because the market is trying to break out. And for now, the market was able to close above the highs. So we have to observe the price action now to see, will this resistance now turn into support, or will we get a fake out and fall back below this? So what we want to see is how the market reacts to the previous highs. We want to see what the market is doing here. Ideally, what you would like to see is a support turning, or a resistance turning into support. We want to see that clear signs that the market is not able to fall back inside the range. Falling back inside the range would be a more of a bearish signal overall. And what we see now is a strong bearish move. There's nothing to worry about yet. Sometimes those retests happen with a strong force. There's a lot of liquidity here, a lot of breakout traders, a lot of orders are going to be clustered around here. So we can expect moves, but what we don't want to see is a very strong pushback inside of the pattern. So for now, it's good. This is now not so good anymore. We're seeing a lot of momentum here. We are falling back inside of the range. And at that point, I would say this breakout looks like it's going to turn into a fake out. I would not typically jump into a short just yet. What you could be doing is wait for a retest or wait for a supply run. This is what is often referred to as a Quasimodo pattern. You can look it up. Basically just a supply and demand strategy. And what you do is, if you see those strong pushes, those strong shifts, you wait for the market to get back to the origin and then turn into the trade direction that you are interested in. So we want to see the market move back inside of this supply and demand area. This is a classic supply and demand zone, nothing fancy about that. And if the market touches this zone again, we want to look for shorts, which it does here. At this point, what you could be doing is also go to a lower time frame, to the 5-minute, and we don't want to short just yet. Again, just like in the previous example, we want to see a little bit of momentum to the downside. We want to see a little bit of bearishness come back into the market. This is maybe a little bit more than a little bit bearishness, but it is what we need. We want to see bearishness come into the market. This is exactly what we want to see. You can put your stop loss all the way above the range. If the market hits the stop loss in that case, I definitely want to be out. So that's a good part of the trading plan. And then what we could be doing is we could target either the center of the range, which is also a very important support resistance level, or if you are an aggressive trader, then you could also target all the way through it. But we can start here with our middle of the range, which is already here giving us a 3-to-1 reward to risk ratio. We have a very well protected stop loss. We are trading this overall fake out with this great supply and demand pattern. And now let's see what happens. We zoom in a little bit again so that we can observe the price action. The market got our stop loss. Now you can see that the market took our stop loss, and I included this example on purpose. I want to show you that nothing works 100% of the time. There's no point in making only videos where everything works out perfectly, because that's not the reality of trading. We got taken out. The market did try to spike above the high, didn't work out. The market was rejected. We have some bearishness. If you are an aggressive trader, you could just jump straight away back into the market, same stop loss strategy, back above the highs, and then you can see to the downside. In this case, we would get almost a 5-to-1 reward to risk ratio. So the first one would have been a 3-to-1, this one 5-to-1, and even if we lose 2 trades in a row, you could theoretically still trade this profitably long term if you have a high enough win rate. With a 5-to-1 or even with a 3-to-1 reward to risk ratio, if you're right 1 out of every 3 trades, 1 out of every 2 trades, you will trade profitably just based on pure math. So don't worry about taking a loss. If the market hits your stop loss, get out, then wait for a new signal to come. And if nothing has changed on the underlying trade idea, then you may be good to jump into a new trade if everything is still working out and there are no signs that the market has fundamentally changed on your first or compared to your first trade idea. So you can see the market seems to be moving much nicer now. We are trading now here around support and resistance in this area. Let me speed this up to see what happens. We're struggling here a little bit, but that's quite normal. If you're trading back inside of a range, you can expect a little bit more choppiness, a little bit more noise back inside of those ranges. You can see there's a lot of levels here, a lot of support and resistance that probably a lot of traders are watching. Therefore, this is nothing unusual, quite the normal range behavior. We'll just fast forward a little bit to see what is happening. You can see the first one would have been hit. And this is then the 5-to-1. And even though the first one may have not worked out, if the conditions have not changed fundamentally and you get another opportunity to get back into a trade with the same or relatively similar parameters, then this could be a great opportunity. Let's look at another support and resistance breakout example. And what we see is that we have a very clear resistance level, right? And the market did break out here. We had a good move and now the market is coming back into this level. And we want to evaluate to see, will this be another fake out? Will the market move back inside of the range, or will this resistance level turn into support and provide a more of a trend following approach? Because you can see the market has been moving higher here steadily, leading into this breakout scenario. So this is going to be a very important case study because this happens quite a lot. What we do is we want to zoom in a little bit more. So I go down to the 1 hour, maybe you can even go down to all the way to the 30-minute time frame. And we want to observe what the market is doing here. So we also have a very strong supply and demand area somewhere in here. So we want to see what the market is doing here. And for a fake out, as shown in the previous example, what we want to see is that we have some type of pattern. We want to see a clear sign that the market is showing us strong bearishness back inside of the resistance level, and then maybe a breakout from or a retest from underneath. That would be a sign of a fake out. If we see that the market is showing us some bullish reversal pattern, this could then be used for some type of continuation. Support turns into, or resistance turns into support trading here. But let's see, one thing after the other. We have to react to the price. We cannot predict. So we're just going to react to whatever the market is showing us. And here we see a lot of volatility, which is not unexpected. As I said in the previous examples, around those support resistance breakouts levels, there will be so much volatility. There will be so many orders around here. And therefore, you will often see an increase in volatility. What we can start doing is marking up levels. So you can see we have this short-term level here to the upside that the market is paying attention to. So we are starting to make lower highs here, which doesn't necessarily have to be a sign that we are moving down, but we have to pay attention to how the market is responding to support and resistance levels short-term, but also long-term. Okay, we don't have a clear picture yet. I would maybe mark it like that. Do you see the pattern? I would say this looks like quite a inverse head and shoulder. Very, very strong bullish breakout pattern. Very good indication here that the market is actually considering this, or this is actually having a good chance of this turning into support. What do we see here? We have lower lows here first. But then here on the downside, we see a rejection. We see 2 rejections. We see a lot of momentum. Then we see the market is making a higher low, which is a very bullish signal overall. And then we are having now this bullish breakout candle, where here's also, you can see when you go to the left, this is the 162 round number. So very good round number as well. We have more confidence on our side. Let me see, do we have a pivot point somewhere in here? The weekly pivot point is down here, so it doesn't act as support in this case, but we're trading above it, which is a good further indication. Aggressive traders to the long side, continuation traders, could consider already going long here. Stop-wise, you have options as always, either below the right shoulder, below here the last closes. Very conservative traders would put it all the way below here, but we could maybe choose an approach in the middle somewhere, not all the way down here, not too aggressive down up here, but maybe just around the closing prices. Our stop loss is below the 162 round number. Targets, what do we see as our first target? Probably here would make a lot of sense. We already get a 2.1 target, but since we're trading with the long-term trend, we could also consider maybe a trailing stop loss approach. But first targets could be here. I think that makes a lot of sense. Let's see what happens. We make a move. We have a retest, the neckline. So we don't only have it on the long-term perspective, resistance turning into support, but also short-term resistance can turn into support again. So we have the microstructure here, another retest. Then what we have, speed it up a little bit. Market is struggling here, but the first target would have been hit, and then we keep going. So you can see we're going with the trend. The stop loss in this case could have been closer, but the closer your target, the closer your stop loss, the more vulnerable it is. We've seen it in the previous example, and therefore I would always recommend, especially in the beginning, don't be too aggressive with your stop loss. You will get taken out more frequently, and although you may be able to find a re-entry, just emotionally it might be harder to trade such an approach with a lower win rate and then trying to get back into the trade. Revenge trading can then often be an issue. But overall, I think this gives you a good overview of different support and resistance strategies. We use different concepts to understand the liquidity and the momentum around support and resistance.